Okay, so let's talk real estate,
Right.
but not the kind that, requires you to win the lottery or sell a kidney.
Right.
Forget about mountains of paperwork and saving up for years and years. We're diving into a world where you could actually become a real estate investor
Okay.
with the cost of a dinner.
Oh, well.
About $100.
Interesting.
Yeah, you heard that right.
Pretty remarkable how technology is changing things up.
Well.
Industries that used to be
Yeah.
exclusive clubs for the wealthy.
Yeah.
Real estate is a prime example.
And that's where EstateX comes in. From what I've been reading, they're using blockchain technology
Yeah.
to open up real estate investing
Yeah.
to pretty much anyone.
To the masses.
Yeah.
Democratization.
Yeah, and they're throwing around all these buzzwords.
Yeah.
Like democratization and fractional ownership, which sound really promising,
Right.
but also kind of like a sci-fi movie a little bit.
Yeah.
So help me out here. How does this actually work?
So imagine taking a skyscraper,
Okay.
something that, most of us could only dream of owning,
Right.
and dividing it up into digital pieces,
Okay.
like shares of a company.
Yeah.
Each piece represents a fraction of ownership.
Got it.
And EstateX is letting you buy these tokens, starting with a surprisingly small investment.
So instead of needing hundreds of thousands or even millions, I could theoretically own a tiny piece of a building with just $100.
That's the idea.
Wow.
It's a radical departure
Yeah.
from how we traditionally think about real estate investing.
Yeah.
It's always been a high-stakes game.
Right.
This makes it much more accessible and potentially less daunting for people who are new to investing.
Okay. Before my head explodes with possibilities, left back up a bit to appreciate how revolutionary this is.
Okay.
Remind me of the traditional way of getting into real estate. It always seemed so incredibly complicated and expensive.
You're right. It's traditionally been a world of huge down payments, mountains of paperwork, a constant fear of something going wrong with your property.
Yeah.
You either need a lot of cash up front, or you had to convince a bank to give you a hefty loan, even if you could afford it. You've got the headaches of property management, finding tenants, dealing with repairs. It's not for the faint of heart.
So EstateX is essentially bypassing all of that.
They're streamlining the process.
Okay.
The magic word here is tokenization.
Okay.
Basically, they're converting real estate assets into digital tokens on a blockchain.
Okay.
And this is what allows for that fractional ownership we were talking about.
So instead of one person owning an entire property, you can have hundreds or even thousands of people owning a piece of it, making it much more affordable. Okay, so tokenization breaks down these huge assets into bite-sized pieces.
Exactly.
But tell me more about these tokens themselves.
Okay.
I'm seeing two different types, PRPX and ESX. What's the difference?
Think of these as the two pillars of the EstateX ecosystem.
Okay.
PROPX tokens are your key to actually owning a piece of a property.
Okay.
They're classified as security tokens, which means they're tied to a specific asset, in this case, a real estate property.
So if I own a PROPX token,
Yes.
I essentially own a tiny fraction of, let's say, an apartment building in London.
Exactly.
Is that how it works?
And the cool part is that owning PRPX tokens entitles you to a portion of the rental income
Oh, wow.
generated by that property.
Interesting.
Those payments are distributed daily
Wow.
and paid out in ESX tokens,
Okay.
the other type of token in the system.
What, daily rent payments?
Yes,
That's pretty amazing.
it is.
But doesn't that create a logistical nightmare?
Well, that's where the blockchain comes in.
Okay.
It allows for these microtransactions to happen automatically and securely without the need for intermediaries or traditional banking systems.
Okay, that makes sense.
Yeah.
What happens if the property sits vacant for a while?
That's a great question.
Yeah.
It likely depends on the specific terms outlined for each property.
Okay.
So it's important to do your due diligence.
Yeah.
Research the property that you're interested in before investing.
Right.
You'll want to understand how rental income is calculated and distributed.
So it's not as simple as just buying a token and watching the money roll in every day.
Right.
There are still factors to consider.
Yes.
Like occupancy rates and the overall performance of the property.
Absolutely.
Got it.
Tokenization might make real estate investing more accessible,
Yeah.
But it doesn't eliminate the fundamental principles of investing.
Right.
You still need to evaluate the property.
Okay.
Assess the risks. Understand the market dynamics.
Okay, so we've covered PROPX.
Right.
Which represents ownership and rental income.
Yes.
What about the ESX token?
So think of ESX as the fuel that keeps the whole system running.
Got it.
It's a utility token, which means it's used for transactions within the platform.
Okay.
You can use it to buy PROPX tokens, pay fees associated with transactions, and participate in various services offered by EstateX, which we'll get into a bit later.
It sounds like the ESX token adds a layer of practicality, functionality to the whole system.
Exactly.
It's not just about owning a piece of property, it's about being part of a larger ecosystem.
Exactly.
Okay.
And the ESX token has another interesting feature. Staking.
Staking,
This is where things get a little more complex.
All right.
But it essentially allows you to earn passive income.
Passive income.
Just by holding ESX tokens.
Now you've got my attention.
It works by locking up your ESX tokens. For a set period of time. And in return for supporting the network's security and operations, you earn rewards in the form of additional ESX tokens. The rate of return, often expressed as APY, annual percentage yield, can vary depending on various factors.
Okay, hold on. I need a little bit more clarity on this APY thing. What exactly does it mean?
So APY represents the annualized return you can earn from staking your tokens. The specific calculation can be quite complex, but it generally considers the amount of ESX you're staking, the total amount staked across the network, and the rewards distribution model set by EstateX.
Got it.
The actual returns you can expect can fluctuate depending on these variables. And it's important to research the current APY offered by EstateX before staking your tokens.
So staking ESX isn't like a guaranteed way to get rich quick. There's still a level of risk and variability involved. But it does seem like an intriguing option.
It is.
For generating passive income within the EstateX ecosystem.
Definitely. And remember, we've only just begun to explore the services and features offered by EstateX.
Okay, my head is officially spinning with possibilities. But in a good way. I'm eager to learn more about those services. But first, I think we need a quick break to process all of this information. We'll be back in a flash.
Great.
Okay, so before we, got into all that, we were talking about the ESX token. And all its potential, stake earning rewards, fueling transactions within the EstateX platform. But what really intrigues me is how EstateX is going beyond just buying and selling tokens. They've created this whole suite of services that really seems to redefine what's possible with real estate.
It really does.
Where do we even begin?
Let's start with one that sounds almost too good to be true.
EstateX Pay.
EstateX Pay,
Imagine walking into a dealership, ready to buy your dream car. But instead of handing over a stack of cash or signing a loan agreement, you use EstateX Pay to make the purchase directly with your real estate portfolio.
Wait, so I could buy a car with my property holdings? That sounds like something out of a futuristic movie.
It does, doesn't it?
How does that even work?
So it leverages the value of your tokenized real estate assets. So instead of selling off a property to free up cash, you can use your PROPX tokens as collateral. Essentially using your real estate investments. Like a liquid bank account.
That's a pretty mind-blowing concept.
It is.
So it's not just about earning passive income from rent. It's about having immediate access to the value of your investments in a way that was never possible before.
Exactly. EstateX Pay aims to make real estate as liquid.
As traditional assets like stocks or bonds. And this has the potential to change how we think about property ownership. And create a whole new level of financial flexibility.
That's EstateX Pay.
Yes.
Pretty revolutionary.
It is.
But it also raises some questions. What are the risks involved? What happens if the value of my real estate holdings drops suddenly? am I on the hook for a huge debt?
Well, that's a valid concern.
Yeah.
It's important to remember that the value of real estate can fluctuate, just like any other investment.
Right.
EstateX likely has mechanisms in place to manage risk, such as loan-to-value ratios and margin calls. But it's crucial for users to understand those mechanisms and carefully assess the potential downsides before utilizing EstateX Pay.
So it sounds like there's a lot to learn about how it all works behind the scenes.
Yes, there is.
Let's move on to another service that caught my eye, LaunchX. It kind of gives me like a Shark Tank vibe. Is it kind of like a crowdfunding platform?
That's a great analogy. LaunchX is designed to make investing in new developments more accessible. Traditionally, if you wanted to invest in a luxury condo project or a new shopping mall, you needed millions of dollars. LaunchX breaks down those barriers, allowing everyday investors to participate in these kinds of projects with smaller amounts of capital.
So instead of being a passive investor in an existing property, I could potentially get involved in something from the ground up.
Exactly. LaunchX acts as a property launchpad, connecting developers with a wider pool of investors through initial real estate offerings, or IREAs. It's another example of how EstateX is trying to democratize the world of real estate investing.
Sounds exciting.
It is.
But also potentially risky. How do I know if a project on LaunchX is legitimate?
That's a crucial question. It's important to remember that investing in any new development comes with inherent risks. EstateX likely has a vetting process for the projects listed on LaunchX, but investors still need to do their own research. Look into the developers, understand the project's feasibility, carefully assess the risks before investing.
Got it. So LaunchX is all about new developments.
Yes.
What about people who already own property?
That's where tokenization comes in.
Tokenization,
This service allows existing property owners to convert their assets into digital tokens on the EstateX platform.
Got it.
It's like taking a physical deed and turning it into a digital representation of ownership.
I can see how that would be appealing to developers or large property owners. But what's the advantage for someone who just owns a single-family home?
Tokenizing their property opens up a world of possibilities for individual homeowners. They can sell fractions of their property more easily, tapping into a global market of investors and potentially attracting a wider pool of buyers. It could make selling a house much faster and more efficient.
So instead of waiting months for a traditional sale to go through, I could potentially sell portions of my house to multiple investors through EstateX.
That's the idea. It increases liquidity, making it easier for owners to access the value tied up in their properties. It could be a game changer for people who need to free up some cash quickly or want to diversify their investments without selling their entire property.
Now we're talking.
Yeah.
But wouldn't that make the process of buying a house more complicated?
That's a potential challenge. Imagine having to negotiate with multiple owners instead of just one. EstateX likely has mechanisms in place to manage the complexities of fractional ownership. It might involve creating a homeowners association for each property where token holders can collectively make decisions.
So it's definitely a new frontier.
It is.
And there are still details to be ironed out.
Yes.
It sounds like the legal and regulatory landscape around all of this must be incredibly complex.
You're right. The laws surrounding tokenized assets are still evolving. And different jurisdictions are approaching it in different ways. It's an area that requires careful consideration and collaboration between policymakers, industry leaders, and legal experts.
It makes me wonder about the long-term viability of all this. You know, it's innovative and exciting, but can it truly become the new standard in real estate?
It's too early to say for sure. Mass adoption of tokenized real estate will depend on a number of factors, including regulatory clarity, technological advancements, and consumer trust.
So it's certainly a trend worth watching.
It is.
Well, we've covered EstateX Pay, LaunchX, and tokenization.
Right.
Is there anything else in this suite of services?
There's one more that stands out.
Okay.
Capital X.
Capital X.
Remember those PROPX tokens we talked about?
Yes, the ones that give me a tiny sliver of that London apartment building.
Exactly.
Okay.
Well, with Capital X, you can leverage those PROPX tokens to secure loans.
Oh, wow.
It adds another layer of financial flexibility to the EstateX ecosystem.
So I could use my tokenized real estate holdings as collateral to get a loan.
You can.
What would be the advantage of doing that?
It allows you to access capital without having to sell your PROPX tokens.
Right.
You could use the loan for a variety of purposes, such as making another investment, starting a business, or covering unexpected expenses.
Right.
It essentially unlocks the value tied up in your real estate holdings without requiring you to liquidate your assets.
That's pretty powerful.
It is.
It opens up a lot of options for people who want to use their investments to build wealth in other areas.
Exactly.
But again, I have to ask about the risks.
Sure.
What if the value of my PROPX tokens drops while I have an outstanding loan?
That's a valid concern, as with any loan.
Right.
There are risks involved. EstateX likely has measures in place to mitigate those risks. Such as requiring borrowers to maintain a certain loan-to-value ratio. But it's essential for borrowers to understand those risks and make informed decisions about how much they borrow and how they use the funds.
It sounds like EstateX is trying to create a whole new financial system within the world of real estate.
It is.
It's exciting.
It is.
But it's also complex and not without its risks.
That's a good summation. EstateX is certainly pushing boundaries and challenging traditional notions of how real estate works. It's a fascinating case study in how technology can disrupt an established industry.
It feels like we've only just scratched the surface of all this. There's so much to unpack and understand.
Absolutely.
But before we get too overwhelmed, let's take a step back and consider the bigger picture. What does all of this mean for the future of real estate investing? Is EstateX a glimpse of what's to come? Or is it just a fleeting trend?
That's the million-dollar question, isn't it? And it's one we'll explore in our final segment. All right, welcome back.
Back again.
So we've spent the last two segments really kind of dissecting EstateX.
Breaking it down.
From its token system to all of its kind of mind-bending services.
There's a lot there.
So let's kind of shift gears a little bit and talk about the bigger picture. You know, we've talked about how EstateX is really shaking things up in real estate.
But could this be a preview of the future of real estate as a whole?
It's certainly possible. EstateX is at the forefront of a movement that's using technology to reshape a very traditionally slow-moving industry. What's particularly interesting is how these platforms are addressing some of the long-standing challenges in real estate, particularly liquidity.
So remind me why liquidity is such a big deal in real estate.
Sure.
It's not like I can just pull my house out of my wallet and trade it for groceries.
Exactly. Real estate has always been considered an illiquid asset. Buying or selling a property typically takes months, involves a ton of paperwork, and can incur significant fees. This makes it difficult for people to access the value tied up in their properties quickly. But with tokenization, you're essentially turning real estate into something that can be traded more like stocks. That's the goal. Platforms like EstateX are trying to create a more dynamic and efficient market for real estate. Imagine a world where you could sell a portion of your property instantly without having to go through the traditional hoops. It could open up new opportunities for both buyers and sellers.
So increased liquidity is one potential impact. What else should we be paying attention to?
Affordability is another major issue that EstateX and similar platforms are trying to tackle. High property prices are a barrier for a lot of people.
Especially in big cities.
Especially in major cities, by fractionalizing ownership. They're making it possible to invest in real estate with much smaller sums of money.
So instead of needing like a six-figure down payment, I could potentially get a foothold in the market with just a few $100s.
That's the idea.
Wow.
And this increased accessibility could have a ripple effect on the market if more people can afford to invest. It could drive up demand. Potentially leading to more development. and hopefully more affordable housing options in the long run.
That sounds promising.
It does.
But wouldn't it also create a more volatile market?
That's possible.
We've seen how quickly things can change in the world of cryptocurrency.
Right.
Could we see similar fluctuations in the value of tokenized real estate?
That's a valid concern. Volatility is inherent in any market.
Right.
Especially one that's still relatively new.
Yeah.
The value of tokenized real estate could be influenced by a variety of factors, including interest rates, economic conditions, and even regulatory changes.
So it's not a guaranteed path to riches.
No.
There's still a need for caution research.
Right.
And understanding of the risks involved.
Absolutely. And speaking of risks.
Yes.
Let's not overlook the security aspect.
Okay.
EstateX relies heavily on blockchain technology.
Right.
Which is generally considered very secure.
Yeah.
But like any system, it's not foolproof.
What kind of security risks are we talking about?
There's always the potential for hacking.
Right.
Just like with any digital platform.
Yeah.
And because this is a relatively new technology, there could be vulnerabilities that haven't even been discovered yet.
So it's essential for EstateX and other platforms to really prioritize security measures.
Yes.
And stay ahead of those potential threats.
Exactly. They need to implement robust safeguards,
right,
educate users about best practices,
yeah,
and continually adapt to that evolving landscape of cybersecurity.
What about the regulatory side of things?
Yes.
Governments are still trying to figure out how to deal with cryptocurrency.
Right.
Tokenized real estate seems even more complex.
You're right. The legal framework surrounding tokenized assets is still in its early stages.
Right.
Different countries are taking different approaches, and there's a lot of uncertainty about how things will evolve.
So this regulatory uncertainty adds another layer of risk.
It does.
For investors to consider.
Yes. And it also highlights the need for collaboration between policymakers, industry leaders, and legal experts to create clear and consistent regulations that protect investors while fostering innovation.
It sounds like there are a lot of moving pieces.
There are.
And a lot of unanswered questions.
Yeah.
It's exciting to think about the potential.
It is.
But it's also a bit overwhelming.
That's understandable.
Yeah.
We're witnessing a paradigm shift in a massive industry. It's natural to feel both excitement and apprehension.
So what's the takeaway for our listeners who are trying to make sense of all this?
I think the key is to stay informed.
Okay.
Be cautious. And approach it with a critical mindset.
Right.
Don't just jump into tokenized real estate because it sounds trendy, right? Do your research. Understand the risks. And only invest what you can afford to lose.
Excellent advice. And if any of our listeners are already dabbling in tokenized real estate, we would love to hear your experiences.
Yeah, definitely.
Share your thoughts, your insights, even your concerns with us.
Yeah, it's a conversation that's just getting started.
It is a fascinating time to be following the world of real estate.
It is.
Who knows? Maybe we'll look back on this moment as the beginning of a real estate revolution.
Maybe so.
Well, thanks for joining us on this deep dive.
It's been a pleasure.
Into the world of EstateX and tokenized real estate.
Yeah.
We'll continue to explore this evolving landscape in future episodes.
Absolutely.
Until then, happy investing.
Oh, and in case I don't see you, good afternoon, good evening, and good night.